Good morning. You're watching Global Market News. I'm your host, Rakha. We begin with a dramatic shift in global market. Gold, long considered the ultimate safe haven asset, is now under heavy pressure. For answer, we go live to our reporter, Pandu. Hello, Pandu.
Thank you, Rakha. Gold prices plunged significantly on Monday, April 6, 2026. In early trading, global gold prices dropped to around 4,614 US dollars per troy ounce, falling 1.31% in just 1 hour after the market opened. This sharp decline is not an isolated case. Gold has already fallen more than 11% throughout March and has dropped around 26% from its peak in late January, wiping out over 2 trillion US dollars in market value. What makes this situation even more striking is that the decline is happening amid escalating geopolitical conflict, particularly tension involving the United States and Iran, including threats targeting energy infrastructure. However, instead of rising, gold is being heavily pressured. To understand why, I am joined by financial analyst Alfis. Alfis, this situation seems unusual. Why is gold falling even when geopolitical risks are clearly increasing?
Yes, Pandu, this is a very unusual market reaction. In normal conditions, rising geopolitical tensions would push gold prices higher. But now, the market is experiencing a structural shift. Gold is no longer being treated purely as a safe haven, but instead as a source of liquidity by investors.
So, what exactly is driving this strong downward pressure?
The main drivers are the strengthening US dollar and rising bond yields. As oil prices surge due to conflict risks, global demand for the US dollar increases. This makes gold more expensive for other currency holders, directly weakening demand.
Does monetary policy also play a role here?
Absolutely, the Federal Reserve is signaling a hawkish stance, meaning interest rates are expected to stay high for longer. This discourages investors from holding gold because gold does not generate yield, unlike bonds or other financial instruments.
So, can we say that the gold is losing its traditional role?
In the short term, yes, the current market clearly shows that macroeconomic factors are outweighing geopolitical risks, which is why gold is under pressure despite global instability.
Okay, thank you, Alfis. Meanwhile, in Indonesia, gold prices are also declining in line with the global trend. The price of untamed gold fell to 2.831 million rupiah per gram, dropping by 26,000 rupiah from the previous day. Buyback price also declined, reflecting broad weakness across the gold market. Analysts warn that gold price will likely remain highly volatile as market weigh the risk of prolonged conflict against strong economic and monetary pressure. Back to you, Raka.
Thank you, Pandu. That was Pandu reporting on significant shift in global financial market, where gold is no longer behaving as a traditional safe haven. As geopolitical tension continue to rise, investors are now focusing more on interest rates, currency strength, and global liquidity rather than fear-driven buying. Stay with us for more update. I'm Raka. Have a great day.